Okay, here's a look at the emini S&P for Friday, January the 28th, 2011. Well, a very strong selling day and somewhat of a surprise. I had mentioned that the market would likely have to have a bit of a pullback and that the next objective was 1300 even. Well, the market overnight came within a point and a half of that, and then during the regular trading hours today came within a half a point of it, and then started to sell off. And the sell-off really started in earnest with the release of the consumer sentiment numbers, although it appears that, quite possibly that the riots in Egypt, general unrest and uncertainty probably played a part in it as well. As you can see here on the profiles today, just a huge profile coming down. Today's range, something about 3 to 4 times the average that we've been getting. So you can see here that the overnight came down into the support area and then went up, made a slightly new high, and then the regular trading hours made that even slightly higher high, and then it started to sell off. So we did have support areas at 88 and then at 79. The market did have a bit of a pause here, not too much of one, and also here at 79, and we're using that 79 now as resistance. So the next levels down are around 67. So heading on down, the next level to look at is approximately 67, and then after that, it'll be about 58. So the market is likely to have some follow through. A day like this is a very important day with this kind of structure, um, and um, and that's why we're looking at follow through lower with the likely test of these next two areas. Even that 74 area, which had been a pretty major support, that could also, and you can see the market did close below it. This will be an area to monitor going into the overnight session. Sunday evening and then Monday to see if it can continue to hold now as a resistance area. And here's the market profiles from the regular trading hours only. You can see the big down day that we had today. Here are our trades here, and they're a little difficult to see because it's such a wide-ranging day. But here are all of our trades. You can see all of the red arrows that we had as the market kept working its way lower. As it tried to hold towards the low, you can see that we had a number of buy triggers in here on several occasions, one very late in the day. So let's go through the trades here. We actually ended up by, this is our first trade right in here. You can see that this was the actual first one set up, not triggered. This set up short, not triggered. So the market was selling off pretty fierce today and not pulling back in order for us to get filled on some of these trades. We did get filled on this one, which worked out nicely. We did get filled on this one, which was number 2, which also worked out nicely. These two in here did not get filled, and so we ended up by not taking this, but we did take this as a long trade, and the reason being is that the market had been rejected off of the 74, and it did work out pretty good. So that was actually our third trade of the day, which was this one right here, and it did have a bit of a bounce up. So we're already long, so there was no trade here. The reason that this first long trade was not taken is that we were not yet into a green filter. This trade was taken as our fourth trade, although it was obviously somewhat precarious, and we were stopped out on that. None of these other long trades were taken, of course, because it was against the filter, and by this time the market was starting to trade below our barrier at 74. So we were able to take some profits out of the market today, able to get on side some of these short trades, and so that was good. Although obviously somewhat of a surprise that the market had this strong a move. When you take a look at those areas that I had mentioned, in and around 88 was an area of initial support. You can see it came in here and had a bit of a bounce. Then we had another indication that the market could find some support in around here. It did have one little bounce here, and that was it. So not much of a bounce to that 79, and then you can see later on that it actually acted as a resistance area. So that's why we're looking at 79 as a key area right now, and also 74. So, looking for more of the same next week. This could be a shift. Our bias has shifted down now, although on the first day of a shift like that, it's transitory, so um, it's not a solid indication that the intraday has shifted down, but it certainly looks like it has. Any questions or comments, just get a hold of us at info@eminidaytrader.com. Always enjoy hearing your questions and comments. Other than that, have a really good weekend, and we'll see you again on Monday.